I've eaten probably the world's most expensive Big Mac in Switzerland. I've also eaten one of the world's cheapest Big Macs in Taiwan. And I was very curious to discover whether they taste the same. And I'm happy to report that they do. And that's the reason why we adopted the Big Mac as our universal standard of purchasing power. This is not my idea. I've been writing about the Big Mac for just 20 years, a mere half of its life. The idea came from someone mentioning to Pam Woodall, our then economics correspondent, quite how expensive burgers were in certain parts of Europe. And that gave her the inspiration. She describes it as this bathtub moment, this eureka moment, that perhaps the price of a burger, a standardized burger, could tell us something interesting about currencies. And indeed it does. The reason why these prices diverge so much is because some currencies are overvalued, others are undervalued. And this index has taken on a life of its own. There used to be an exhibit on it in the Money Museum in Frankfurt, the Geld Museum. One of our colleagues, Henry Trix, on a rare visit to North Korea, presented the Big Mac index to government functionaries there. And although there is no McDonald's in North Korea, they were quite keen to learn what it said about the Chinese yuan, China obviously being North Korea's key trading partner. And it's even excited the interest of currency traders, hedge fund managers. I'm told that Soros Fund Management admitted that when the euro was introduced, it looked at the Big Mac index, which suggested the euro was overvalued and therefore might be ripe for a fall. And it wondered whether it should trade on this signal. Ultimately, it ignored the Big Mac index. It went with the consensus view that the euro would strengthen, and it lost out as a result. As Pam mentioned, Soros was probably very cheesed off about this.
Well, it was a really brilliant idea by Pam, who is a dear colleague, and she had lots and lots of good ideas, but this was one that really stuck. Henry, tell me a little bit about the underlying economics here. What's going on? Why does this work?
Well, the idea is purchasing power parity, the idea that currencies should exchange at the rate implied by their purchasing power locally. And it works very well because, as Simon said, the Big Mac is the same everywhere, but also because the Big Mac is actually quite representative of local economies. It contains some things that are globally traded, some things that are only locally available. It reflects the cost of labour and rent locally and so on. So it's a very effective proxy for that. But of course, the problem is that currencies do not, in fact, only represent the purchasing power they have locally. They also reflect confidence in the economy's institutions, the outlook for economic growth, and very importantly, and one reason the Big Mac often goes wrong, very importantly, interest rates. And so when the Big Mac index and the true exchange rate, the nominal exchange rate, get out of whack, very often it's because central banks are doing something which is causing all this speculation that has nothing whatsoever to do with burgers.
Look, it's as Henry describes, it's a very simple idea. That was its brilliance. But it's an imperfect but nonetheless simple way of capturing exchange rate misalignments, purchasing power parity, and as such, it is used, and Josh will tell us, I'm sure, how it's used by traders, but because it is so easy and now so widespread, and we collect it every month and McDonald's helps us for huge numbers of countries, it's a kind of back-of-the-envelope way of trying to, assess a mismeasurement. And so it's great for scholars. Scholars have used it. I don't know, Simon can tell us exactly how many papers have been written about it, but huge numbers of academic papers. It's also something that for policymakers is a flashpoint, because if you have an undervalued currency and the Big Mac index points it out, then you're going to become very bristly about that, particularly.
Well, we actually have an example of that from the Taiwanese central bank, normally very mild-mannered people. They say using purchasing power parity concepts, including the Big Mac index, to gauge the equilibrium exchange rate is inappropriate. Then they go on to say that international institutions, they quote, say that PPP is not an equilibrium exchange rate and should not be used to measure currency under or overvaluation, let alone relying on a single commodity to assess a nation's exchange rate valuation.
This is really interesting because this was a response to a very, very good and hard-hitting piece about the Taiwanese economy and why Taiwan scores at the bottom of the Big Mac index. And the Taiwanese central bank has had a policy of systematically ensuring the undervaluation of its currency. So of course it's going to bristle at this.
So Josh, the billion-dollar question is: do traders actually use this?
Well, yeah, it's a meaty question, isn't it?
Oh no, we can't. We have to stop. We have to call truce on puns at this point, right from the beginning.
So I think in one way, no, it does not predict short-term movements of currencies. Imagine if a well-known signal that is quite easy to construct like this did tell you how currency markets were going to move in the short term and you could trade profitably on it. Well, obviously professionals would construct it themselves. They'd use it immediately. They'd already harvest the gains and the signal would go away. Over the longer term, it has sometimes been a sort of weak kind of 6 to 10 year signal of where currency markets are going. So a feature of currency markets, even more than others like stocks and bonds, is that their returns are wildly unpredictable, and this doesn't really help you. In another sense, however, if, say, I'm an investor thinking of investing in a Korean clothing chain or a casual dining group, then a concept like purchasing power parity is very useful to me, because I need to know how wealthy do Korean households feel over and above what's implied by exchange rates. So I definitely need signals like this.